Hello and happy Thursday, community. I hope you and yours are doing fantastic. Welcome to today's community event. I hope everyone is having a wonderful day. Apologize for the slight delay, um, but let's get this session going. One thing I want to welcome everyone that is tuning in for the very first time. Welcome to this community. We are a very education-driven ecosystem and community. We have various events that are weekly and daily as well. So I want to encourage you to be part of these. I see, if you have not yet, I see Queen Val already placed the 3 links to BULLRUN, Survivor and Killer Whales Telegram groups. So feel free, if you have not yet, to be part of it. Join the movement, join the ecosystem. I also want to welcome the regulars that are consistently taking their time and being part of these sessions. We are very pleased to have you here with us. These sessions mean a lot to us as they open doors. They give us the opportunity to interact with each other, to socialize, to grow together, to be informed, educated, and inspired. And this is something that is very much needed in this industry, as we are about to see as we progress throughout today's session. So education is power. Education gives confidence. There is so much noise in this industry that if we're not informed and educated as individuals and as a community, we might be swayed, and we might make irrational decisions based on emotions. As we know, this industry is still very young. However, that should not be as counted as an excuse, right? And it's very sentiment driven, and this is beyond the crypto industry. The financial industry as a whole is extremely sentiment driven. And as we will see once more, this is not just me saying it. And these are statements that we just opened this session with. We will have to back every single statement we just said, right? I like to stress that all the time, because I encourage us as a community to always be critical. Let's be inquisitive. Let's not just take anything for its face value. Let's question things, right? Because in life in general, we tend to gravitate towards things that we understand. Things that are foreign and to us and that we don't understand, we tend to avoid it, whether it's for our best interest or for the worst. It doesn't matter. We can have something great in front of us, but because we don't understand it, and we are so we develop fear towards it, and we might avoid something that actually is good for us. And the opposite can happen too, right? If you don't understand something and it wasn't good for you, it works either way. So it works both ways. So this is why it's important to be informed. Don't take anything for its face value, and let's embrace knowledge. Let's embrace to be informed, especially in this wonderful industry. With that said, our daily activity is tweeting and retweeting and adding comments to it. Why are we doing this? It's to bring awareness to this industry. It's to bring awareness to our ecosystem. It's a fairly young industry, like we say, and we all need to be informed and educated, as this will strengthen our, not just it will strengthen our understanding, but it will give us the confidence needed to go through this industry, to go or to scroll through Twitter, crypto Twitter, without panicking or developing some sort of emotions as we do so, right? Enough of that. Those who have not yet, all the tweets are out. BULLRUN, Killer Whale, and Survivor. So those who have not yet, I highly encourage us to do so. Let's engage with the tweets. As we are all very familiar with, we always like to scroll down to the comments. That's where all the meat and potatoes are. That's where all the juicy information is, right? So as we're listening to the YouTube video, we always scroll down and read the comments. So we know the power of comments. So let's ensure that we will, at the end of this session, write some comments there besides the obvious liking and liking the video, so that it can trigger its algorithm and reach as many people as possible. So community, with that said, there's a lot to be discussed today, and we're going to really take our time because it's a very important topic today, as we will identify the difference between the blockchain as an asset and the blockchain as a technology. Oftentimes, especially with Bitcoin, these things are intertwined, right? People look at it the same, like cryptocurrency, blockchain, Bitcoin. It's all the same thing, right? However, it's not. And we'll have to understand the differences. And then once we identify that, we'll really look at the space differently, and we'll be able to be more confident about the things in our crypto journey, I should rather say. So with all that said, let's ensure that we get to today's session. As always, I appreciate all your comments that are out. We will get to all of them at the end. We won't skip a single one, as we appreciate your comments and your contributions. If you have any questions as we go throughout this session, feel free to write them, and we'll go through them at the end of this session, right? So with that said, let's get right into it. Let's dive headfirst into CoinMarketCap, and let's just briefly breeze through this because there's really not much to say. And this, again, like we say, every statement that we make, we like to verify, double check. Don't take my word for things, right? Always verify, always double check, triple check. And this is how we grow, right? Individually and as a community. Let's not just take things for their face value. So remember how we said that the markets are sentiment, and we'll briefly address why. We always have to ask ourselves why are things happening. Let's be inquisitive, and the moment we understand the why, then we can know the what, right? So we see that we are like really sideways. We had 2.76 trillion for the down 0%. So we're literally going even. Keep in mind the markets were pumping earlier, and we'll understand why shortly. And now it's back down. Bitcoin had gone all the way to 85,000. Ethereum was above 2,000 earlier as well, but now it's pushing back again. And we see the fear and greed index right here on the far right side. It's at 31. This just shows that the market is fearful. And usually when the markets are fearful, it reflects it in a negative way, right? So with that said, that's what I want us to highlight and to understand and take away from here. So now let's understand why the markets were pumping at the beginning of the day, and then later on it slowed down. And let's understand why. Let's look at these things. Remember, we say that don't take everything for their face value, right? There's a lot of noise out here, and let's always verify things. So the market was excelling and going up in prices, and the market was being pushed up because a simple meeting today at the White House, and there was another crypto summit, right? And the sitting President Trump was to speak, and he really spoke at the summit. And the White House, there's another news outlet that was saying that the White House is eyeing Bitcoin reserves, right? So White House is eyeing Bitcoin reserves. This is like a buzzword. Once you say this, you combine White House and Bitcoin reserves, and you have a market that is pumping, right? So in anticipation, of course, the market was pumping. Why? Based on emotions and sentiments, based on hype, the markets were pumping, right? So, and then to go even further, here is another one that is interesting, right? Not calling anybody out, so let me not even focus on who posted it. That's irrelevant. It's more what was said. So this is again right before President Trump spoke, talking about this individual. He made some remarks, right? These are not facts. These are not these are not factual. These are just remarks, right? So speculations. And these are the things that are pushing the markets and creating FOMO for the markets to be pumped, right? So based on this tweet, this individual's remarks indicated that the US may adopt Bitcoin as a strategic reserve asset, and this Bitcoin strategic asset reserve as an asset would be used to tackle the debt crisis, right? So, two things we need to identify here, community. And again, I always like us to verify and fact check and look. Don't just read things or listen to things and take them for their face value, because there are two major flaws in this article, right? The first one is the US may adopt Bitcoin as a strategic reserve. Just to look at things and to triple check, this was done today, Eastern Time, US, right? March 20th, today, right? This was tweeted today. And this is a fairly reputable Twitter account, right? You see it has almost 200,000 followers. And it says that it's your number one source, right, of unbiased crypto financial news, and it's providing clarity. That's what it says, right? So, and they say that they're here to provide clarity. They're the number one point of reference, right? And they're saying that there are remarks indicating that US may adopt Bitcoin as a strategic reserve, and it's to help US debt crisis with their 36 trillion debt crisis, right? Okay, let's learn by doing. We just say that we shouldn't be taking everything or any tweet to its face value. So let's verify this. Let's fact check this. Okay, this was tweeted today, and this tweet was part of the movement that pushed the market to just get people hyped and in formal motion. Trump is supposed to hold a summit, right? And he's going to talk about Bitcoin reserves, and they may adopt Bitcoin as a strategic reserve, right? Okay, let's fact check this. Let's fact check this. And another thing also here, it gets even better. Okay, another news was that now, as Russia is revealed to be gearing up for a crypto showdown with the US, a leak that primed the Bitcoin price for a big crypto update, right? So Bitcoin price was primed. Again, we're in a sentiment community. I mean, we're in a sentiment industry. So things are sentimental. It doesn't have to be factual, right? As long as it's hype and it touches people's emotions, that's all that it's needed. Not based on fundamentals, not based on facts, not based on truth, just hype, right? So anyway, a leak apparently that primed the Bitcoin price for a big crypto update from President Donald Trump has been confirmed. So somebody in the circle apparently spoke to a news outlet and confirming that there'll be a big crypto update, right? So all of these things, community, are led to the pumping. We're just verifying what made the crypto industry pump and then dump, right? So now let's fact check this. Remember, let's go back to this. US may adopt Bitcoin as a strategic reserve, and this was tweeted today, right? As we see here, March 20th. Now, let's fact check. This is public information. This is information that is out there. This is the whitehouse.gov website. This is where the US executive orders are listed. This is public information. It's right there. So this tweet was tweeted today that Bitcoin as the US may establish a Bitcoin reserve, right? Now, this is exactly 2 weeks ago. This was March 6th. This is an executive order that says establishment, and keep in mind, English is not my first language, right? But that doesn't even have to be the case, because if you can read, you can understand, right? So establishment of the strategic Bitcoin reserve, right? And United States digital asset stockpile. So this executive order is actually telling us that the strategic Bitcoin reserve has been already established. So why are people hyped about Trump speaking today at the summit and he may establish the Bitcoin strategic reserve? It's been established 2 weeks ago under an executive order, and it says it here: by the authority vested in me as the president, by the Constitution, etc., etc. It is hereby ordered. And it did made this executive order 2 weeks ago. 2 weeks ago on the 6th. And it was to Bitcoin. It was here. It is the policy of the United States to establish a strategic Bitcoin reserve, period. It's right here. This is news that is 2 weeks old. There's nothing new. So why is the market pumping based on something that was already established like 2 weeks ago, exactly 2 weeks ago? This is what we mean with all this noise, right? So all this noise, community, that we hear, that is literally just made to pump and bring emotions and FOMO into the markets, that there's no truth behind it, there are no facts behind it, it's just mere speculation. And this is what moves the markets, community, right? This is one of them, right? Trump speaks in crypto summit as White House eyes Bitcoin reserves. These are no facts. There's just rumors, right? And same here too. Talking about US may adopt Bitcoin as a strategic reserve. The US already had done this 2 weeks ago, right? So individuals getting into the industry and reading things like this are FOMOing and just buying based on what they read on Twitter. And if you look at an account and it has almost 200 followers, it seems legit, and you're like, oh, they might be right, it's true, but always fact check things. We're not here to, call names or anything. It's just for us, this is why we stress on education, community. Be informed, be educated, verify, be inquisitive, always ask why, right? And double check, triple check your sources. It's very important in this industry. And these are the news that got the markets pumping, right? So now that we've done this, let's look at, don't worry, we'll look at what was actually discussed, right? We'll actually look at what was really discussed in the summit. We'll just briefly tune into some 1-2 minute video sessions that was discussed. And in a nutshell, what was discussed was about, as usual, stablecoins, strengthen the dollar, strengthen the bond market, real world assets, blockchain technology, and Ethereum, basically, right? Again, don't take my word for it. And like we said, we read here, it's all about digital assets, right? It's all about the digital asset. So now, let's look at something here. I want us to look at something here. Let's move on to something else. While US established a Bitcoin as a reserve, keep in mind, this is not based on fundamentals. That decision was based on a promise made during the campaign, right? And the president was really eminent and on saying, we promised it, right? And now we kept our promise, right? Exactly. So there is something that you just want to keep your promise because you are handsomely paid for it. And there are choices you make based on fundamentals. So while the US has accepted Bitcoin as a reserve, the Swiss central bank rejected it, right? They rejected it and said Bitcoin is not fit for reserves. One of the citations was their volatility, right? So we see two completely different approaches, right? One central bank, which happens to be the global reserve currency, US dollar, and the largest economy in the world, is actually accepting and has an executive order. It's not in the law, but it's an executive order. The difference is that the next president that comes can just get it out, right? And that's the difference. And I really want us to understand this. There is an executive order for Bitcoin as a reserve. That's an executive order. If any new president comes in, it can just be removed. It's not set in stone. It's not law. Follow along. This is very important. It's not a law. It's an executive order, like we just saw earlier, right? So the Swiss central bank, they rejected Bitcoin, citing volatility. What else? It can't be just that, right? And let's understand, the Swiss National Bank is the most well-run central bank in the world. And it's the central bank that has the most liquidity in its industry. We had dedicated an entire session to this, right? So if you've not watched it yet, I highly encourage you to watch this. We really dug deep and we went into it. So we're not going to go deep on it. Just take my word for it, right? And do your own research either. So the Swiss National Bank is the cream of the cream. And they know this is why they've always established a very heavy $1 billion US dollar equivalent of foreign exchange currencies or fiat currencies. So they're moving and regulating their markets, their monetary policy based on liquidity, and we'll see exactly why. So the Swiss National Bank governor, Mr. Schlegel, he reaffirmed, right? He already did it before, and now he had to reaffirm that the central bank's position against incorporating Bitcoin or any other asset, not just, he made it clear and reaffirmed, no Bitcoin and no other digital asset. Now, keep in mind, the keyword here is asset. The topic today is the difference between blockchain asset and blockchain technology. So he said, not Bitcoin, nor other assets, digital assets, into its foreign exchange reserves. Remember, we just talked about foreign exchange. Switzerland has the largest foreign exchange outside of China and Japan. China is the world's manufacturer. China has over 3 trillion in foreign reserves, but they have like 1.3 billion people. Switzerland has 8 million in population, 8 million, and has $1 billion in foreign exchange, right? So you just see that they're really large and they're heavily invested in foreign exchange, and this is how they move and stabilize their Swiss franc. Why are we talking about this? Is because the president of the National Bank said that Bitcoin's high volatility, instability, right? It's unstable, and the regulatory challenges, right, with cryptocurrencies. These are factors that were the main reasons. However, let's look at this even deeper. This is exactly what we need to understand, community. He highlighted that the Swiss National Bank's reserves, this is key, are meant to, he's even having to justify and educate other central banks on what reserves are actually meant to do. But national banks' reserves are meant to support monetary policies. That's what reserves are meant to do. This is why they rejected Bitcoin, because it's illiquid, it's unstable, and it's volatile, and in the instability, right? And they focus more on their foreign exchanges reserves, right? And it doesn't match there. Foreign exchanges are extremely liquid. You can liquidate in an instant. So this is the reason why. They even gave us a reason. He had to justify and educate other central banks and remind them that the national banks, central banks' reserves are actually meant to support the monetary system and not to actually break it down, right? And he noted that digital assets do not align with this goal. This is a strong statement. And the key word here is digital assets. Remember, today's topic is difference between blockchain asset and blockchain technology. And here, specifically, they're talking about the assets, right? So let's understand that. So now, as always, like we said, let's not take this article's word for it. Let's be critical. Let's ask why. Why is this individual talking about this? This is not just some random tweet. This is the president of the Swiss central bank that rejected Bitcoin and said that due to its volatility and instability and lack of liquidity, it is rejected because it doesn't fit what central banks reserves are meant to be, and they're meant to support the monetary system. And he noted that digital assets do not align with this goal. Fine, but let's not take this article's word for it. Let's look at another source. Let's verify, right? So let's go to Singapore, another powerhouse if it comes to management of their central bank. Singapore is one of the strongest economy in the world, one of the largest sovereign wealth funds in the world, right? And here is the Monetary Authority of Singapore, and they're saying that cryptocurrencies have failed the test of digital money. So this is a confirmation. And this is not just some random person. This is the managing director of the Monetary Authority of Singapore. This is not just some random tweeter. This is a very powerful individual that is very well, highly decorated, and is the managing director of the Monetary Authority of Singapore. To make this clear, the Monetary Authority of Singapore is the equivalent of the SEC in the US, Security and Exchange Commission, right? This is they put in laws, they implement laws, and they regulate the financial industry. And here's an individual that said cryptocurrencies failed, right? So this just confirmed what the Swiss National Bank said, right? So at least, okay, there's some truth to it. If two highly decorated individuals are saying this, there might be some truth to it. But why? Why is that the case? So let's look at some more reasons why. So they were talking about stablecoins, right? Not crypto, will be part of a financial ecosystem in the future. We already discussed the reason why, right? This is exactly what the Swiss was saying. They were saying that you need a fiat, foreign exchange currency. Stable coins are fiat. They are liquid and not crypto. Because right now, cryptocurrencies are illiquid, even including Bitcoin and Ethereum. They're still illiquid right now. But we'll get to it. We'll get even deeper to this. So for right now, let's understand that that's what was said, right? And this is why we saw that even the executive orders we will see is meant to strengthen the dollar and strengthen the bond market. So now that we've read this, let's understand something else. Let's ask ourselves question. Remember the why. Always ask yourself why. So why gold is rallying and Bitcoin is not? Why are we stressing on Bitcoin? Because it's the largest, first of all, it's the largest cryptocurrency, the fast cryptocurrency. If you compare it with other cryptocurrencies, it is the most liquid, right? Compare it with others. But we'll find out that if you look at it differently, you'll find out that literally it's not liquid. And we have to verify, again, let's not take this article's word for it, right? Maybe they just don't like Bitcoin, right? Maybe they just don't like Bitcoin. So let's verify. They don't like cryptocurrencies. So we'll have to verify this. Why is he saying that cryptocurrencies failed as a test? And again, it failed as a medium of exchange and a store of value. To be a medium of exchange, you need to be stable. This is why stable coins are the future of this is why they say stablecoins, not crypto, will be part of the financial ecosystem in the future, right? This is exactly what was said. So, and to be a store of value, you need to be extremely liquid. People should be able to liquidate their assets at any given moment. And that right now in the traditional world and in the digital world, right now in the crypto world, the only place you can do that is with foreign exchange and with stable coins. That's the only place you can liquidate at any time. So now when we go back here and ask ourselves why the gold is rallying and Bitcoin is not. So gold has hit a record high even as investors seek insurance against stubborn inflation, right? Investors seek, whenever there's uncertainty, there's fear, investors are looking for insurance against inflation. And but Bitcoin has been dealt a blow this week as what interest rates cut hopes have dimmed. So we're looking at two things here. Whenever there is economic calamity, there is an economic challenge such as inflation. Why? Due to lack of cuts in interest rates. That's when investors are seeking insurance, safe havens, right? So Bitcoin enthusiasts often argue that one of the digital currency's many virtues is its ability to act as a safe haven asset, fulfilling the role that gold has traditionally played, right? This is always the argument. This is always what's being called. It's digital gold, etc., etc. However, Bitcoin's claim to be equivalent of digital gold, which holds its value as government-issued currencies, lose their purchasing power, has been thrown into question by the events of the past month. So all of this has been asked, people ask themselves, why is it the case? Wasn't this supposed to be digital gold? So why is the real gold going up, but the largest cryptocurrency is not going up, right? And this is exactly what experts were talking about. This is why they were saying that cryptocurrencies failed the test to be digital money. They failed the test to be a medium of exchange or a store of value. Why? Because lack of liquidity. They are not liquid like stable coins, like fiat, like the fiat foreign exchange. Different currencies, like the Swiss National Bank argued, right? They say that this Bitcoin or other digital assets, they don't meet. This is why they can't incorporate for digital assets and Bitcoin in the foreign exchange reserves. Why? Because it doesn't meet. It doesn't align with their goal. What's their goal? Is to support the monetary system, right? This is the reason why. So now that we understand that, let's verify even further. Let's not take these three articles word for it. We read three separate articles, but we're still not convinced. Let's verify now. Let's do some basic math, right? Let's really verify now, because let's still doubt. I like to doubt. Let's be critical. So to be critical, let's come over here and let's look at some numbers now. So there are just 6 Bitcoin billionaires, right, in the world. Now, what are we verifying? We're verifying, why is Bitcoin considered illiquid? Why can't Bitcoin be the digital gold? Why can't Bitcoin be a true reserve currency? Why is the largest and the best managed central bank of Switzerland rejecting Bitcoin and saying that it's due to its lack of liquidity and they rather hold liquid assets such as foreign currencies? And it doesn't fit into their agenda, which is to strengthen their fiat currency, right? To strengthen the monetary system. So let's verify that. Why is everybody claiming, including myself, that Bitcoin is illiquid, right? And why that is a challenge, that one of the 4 challenges we are addressing. So right here, there are 6 Bitcoin billionaires in the world, right? Based on the Super Rich report, right? Now, keep in mind, let's read this. So hundreds of millions of people around the world have some form of cryptocurrency, right? Whether that is Bitcoin or one of many other digital currencies. Now, to be exact, 425 million people. Now, keep in mind, this is an older article. So of course we had to fact check. We want numbers of today. We want to be up to date. So based on today, right, approximately this number now is no more in the 400, but rather it's in the 500. So right now there's 562 million people roughly that own type of cryptocurrency. So this equals right below 7% of the global population. So it increased from the past year. So this is the up-to-date number right now, right? So I just wanted to clarify that there's more people now. But what's really interesting is when we go down here. Down here, let's scroll down, and this is where it really starts to get interesting. Okay. Remember, we are trying to verify how liquid Bitcoin is. So the farm's report, this is a report that says that there are over 88,000 people that have crypto assets worth at least 1 million, right? And less than 1% of overall crypto users. So some 40,500 of them hold their investments in Bitcoin, right? So over 40,000 of these individuals that have at least, it says at least $1 million have Bitcoin, right? So of course we have to look at these numbers. So let's make some sense out of this. So let's put in 40,500. This is how many people that hold their investments in Bitcoin, right? And they at least have 1 million. So let's take the 45,000, just simple math. And then we multiply by 1 million because each and every one of them has 1 million. So this will bring us to 40 billion. So this means that if these 40,000 people that hold at least $1 million want to cash out at the same time to get their liquidity out, there would have to be at least 41, let's just put 40 billion, over 40 billion in the liquidity pool of Bitcoin, right? So if just these individuals that have at least 1 million, there would have to be over 40 billion in the liquidity pool. 40 billion community. Keep this number in mind, right? This is the ones that have 1 million, right? But there is more. So we just saw that there are 6 billionaires. So over there, we don't have that 6 billion. If they were to cash out, like right here, if 6 billionaires, Bitcoin billionaires, were to cash out, it will take 6 billion. So that means Bitcoin has to have at least 6 billion in liquidity for these 6 billionaires to cash out, right? Then we saw how not billionaires, but millionaires, at least 1 million, they would need 40 billion. But there is more. There are also those that have their holdings in value of 100 million, right? And 78 of them focus on Bitcoin. So let's do the math once more. Now we have only 78 people that hold 100 million, right? So that means there will have to be at least 8 million or 7.8 billion liquidity in Bitcoin in order for these individuals, these 78 individuals, to cash out, right? Now, keep in mind we are verifying the fact that why does the Singapore Monetary Authority claim that crypto assets, digital assets, don't meet the requirement to be a store of value and a medium of exchange, not just because they're volatility, but also because they're illiquid. This is what we are verifying. Keep this in mind. So now we looked at 3 different people. We look at 6 billionaires. That means 6 billion needs to be in the liquidity pool. We looked at what was it? We looked at 40,000 individuals with at least 1 million. That means 40 billion that needs to be in the liquidity. And then we finally looked at the individuals, 78 individuals with 100 million. They also need over 7 billion in the liquidity pool. Now, this is easy. Now let's look how much. So if we just roughly do the math again, so let's look at this. So we will need 7.8 billion plus it was 40.5 billion, right? Plus 6 billion for the 6 billionaires at least. So we at least need 2.8, right? We need 28 actually. It's 28 billion that we need in the liquidity pool right now. 28. So let's go and check how much liquidity Bitcoin has. And to do that, we can simply just come over here and we can come down here and see how much liquidity Bitcoin has. So Bitcoin has 1.9. Let's round it up, 2 billion. 2 billion in the liquidity pool. Now, we saw the 6 billionaires. There should be at least 6 billion for them to cash out. This is 3 times less. There are 40,000 millionaires, at least 1 million and above. So that means there should be over 40 billion for them to cash out. Well, there's only 2. And then there's the 78 individuals with 100 million. So that means they would need 7.8 billion. However, there's only 2 billion. So how's that going to work? None of them can cash out. So their wallet shows a bunch of money, but if you come to where they should cash out, there is none. There's not much to cover all of it, right? So literally, 2 of those billionaires can really crash the entire Bitcoin system, right? Just by selling out, dumping on everyone, right? So this is exactly, we just verified why monetary authorities, the Monetary Authority of Singapore was highlighting stablecoins specifically and not crypto that will be part of the financial ecosystem in the future. It's because stablecoins are the most liquid, right? If you go to CoinMarketCap and you look at stablecoins, you will really understand that stablecoins market cap is literally how much liquidity they have. So for example, Tether with 143 billion market cap, they have over 143 billion in liquidity. This is why stablecoins are more is solid, right? Same with USDC. USDC is 59 billion. This means that they are backed by 100%, right? Somebody can dump 10 billion right now, like it happened with Binance, for example, or rather, like it happened just lately when the situations happened with Binance. People dumped so much stable coins and nothing happened. Nothing really happened, right? So this is because they have enough liquidity, community. And this is the reason why the Swiss bank also said rejected Bitcoin. Does it make sense now? Because they can't use Bitcoin because in their reserves, they just can't, because it's not meeting their standards. It's not liquid. It's just not liquid, right? And that's the reason why. So it's not just the volatility, but it's the lack of liquidity, right? So this is important for us to understand. Now, let's take this further now. This is another executive order. This is the oldest executive order. It's from January 23rd, right? January 23rd. At the beginning of this year, there was an executive order stressing on strengthening digital financial technology. It's about the tech. Now we're talking about technology. Strengthen technology. Simple, very straightforward, right? Now, to make more sense out of this, we need to really understand this. The digital asset industry plays a crucial role in innovation and economic development in the United States, right? And keep in mind that keyword here is assets, because assets, we need to really understand the difference between digital technology and digital assets. Let's take the time now on here to understand that, because they're talking about how the administration is supporting the responsible growth and use of digital assets through blockchain technology and related technologies across all sectors of the economy, right? And how is this supposed to be done? It's to protect and promote the ability of individual citizens and private sectors entities alike to access and use for lawful purposes. And this is the keyword, community: open public blockchain networks. Now we're talking about blockchain networks. This is the blockchain technology, right? You need the blockchain technology, and the blockchain technology is here to develop, it issues infrastructure to develop and deploy software, right? The blockchain technology enables digital asset developers to develop and deploy software on there, right? And to participate in mining and validating. These are, mining is for Bitcoin and validating is for proof of work. You do mining, and for proof of stake, you validate, right? And to transact and other persons without all this censorship, etc., etc. Now, this is the key here: promote and protect the sovereignty of the US dollar. Why? It's the global reserve currency. And how do you do that? Is you have to promote and develop by promoting the development and growth of lawful and legitimate stablecoins, right? Dollar-backed stablecoins. Here we are again. The Swiss said they're focusing on fiat currencies because they're most liquid. The Monetary Authority of Singapore said stablecoins are the key. Here we have the executive order saying that we need to promote the development and growth of stablecoins. Literally, today's summit was all about stablecoins, digital assets, Ethereum, real-world assets, right? So this is very important for us to understand. So we need to provide, regulatory clarity and certainty built on technology neutral regulations. It's about technology, built on technology, right? So now that we understand that, let's just briefly, what's the blockchain technology? What's the definition of it? So blockchain technology is a decentralized digital ledger, right? It's actually a digital ledger technology. All it does is to record transaction across multiple computers in a way that ensures the data is secure, transparent, and immutable. That's it. It's a ledger. It's a technology that is transparent, immutable, meaning that nobody can stop you from doing it. You can participate in it, right? And that's very important. That's the technology. And to even stress it more, it provides the infrastructure and protocols, right, such as Chainlink, like oracles, so that we can access data and we can see the prices of these assets, right? The assets that are deployed on them, and to create, manage decentralized networks, right? And this includes proof of work, proof of stake, like we just said, through mining, and so on and so forth, right? Mining and validating. So this is very important for us to understand that staking is for security of digital data and digital data storage, right? So, and what is digital asset? Now, the difference is that digital assets are digital assets that exist on a blockchain, right? They're digital assets that exist on a blockchain. They represent value or ownership and can be transferred, traded, or stored securely on the blockchain. That's the difference. Blockchain is the infrastructure behind it that enables digital assets to be built, deployed, developed, and deployed on the blockchain. So without a blockchain, without the technology, the digital assets are useless. And that means that the underlying digital technology needs to be solid. If it's not, that means that any other asset built on top of it, it's basically in vain. So if the underlying blockchain technology that assets are built upon are not strong, are not sustainable, are not efficient, then it doesn't matter what assets are being built on them. Do we understand this? So the most important part is, what are you building on top? What is the underlying technology? Where are you deploying these smart contracts? It's very important. And then once you build your assets, your digital assets on top of it, you need to also have efficient, sustainable mechanisms in place. Now, why are you saying that? Let's take it to the next level now. So connecting back to Ethereum, right? Ethereum is here to connect institutions to the Ethereum ecosystem, right? Ethereum is the largest, most secure, and most open blockchain for the world to use. And Ethereum is open for business, right? Etherealize is here to provide research, content, and products to bring the world onto Ethereum. Furthermore, and I really personally, I like this, right? It's upgrading the financial system. That's basically what it does. In the end, every asset will be tokenized on and secured by the Ethereum economy, right? I say, Steve, you're being biased. And of course, Ethereum is going to say this. This is their website. And of course, they're going to say this, right? So, okay, fine. That's a fair statement. So let's be fair and let's listen to somebody else's statement. And this brings us to today's summit. Today was a digital asset summit that President Trump also spoke for about 2-3 minutes, right? And this is what was at the core of this summit, basically. This is what was discussed. So here that we're about to hear, the individual we're about to hear is on the far right. He is a representative of BlackRock. And the individual in the middle is the founder of Consensus. We all use his product. Most of us are using his product, MetaMask, right? So these are very, very, these are literally individuals that have been in the industry for a very long time, right? And the one on the left is just the moderator, right? He's asking the questions. He's the host. So now we want to focus on the one on the far right. He is from BlackRock, the representative. And let's hear the question he was asked by the host. And just to give you a heads up, he was asked of what he thinks about decentralization and what he thinks about the blockchain technology. Where is that heading? And what does he think about, so I just want to give you that heads up. So let's keenly tune in and listen to what the BlackRock's representative is about to say in accordance to, so that we don't take Ethereum's word for it, right? Keep in mind what Ethereum said. Ethereum was claiming that it's upgrading the financial system and that in the end, every asset will be tokenized on and secured by the Ethereum economy, right? And let's be critical. Let's not take their word for it. So let's tune in, community. Let's listen.
Adoption. So we appreciate everything from like BlackRock leading the charge on that. Last question and zooming out, we are in a new paradigm of blockchain adoption. There's a lot of different players out there. There's a lot of competition out there. Ethereum was founded on the basis of decentralization and being a resilient network. I'll zoom out and ask as the final question, does decentralization matter anymore from an institutional standpoint? And what value do they put on a decentralized network? I'll start with Robbie.
Well, I think it does matter. I think some of the negativity around Ethereum in the narrative lately is very overdone. There's a lot to be optimistic about. Joe's obviously characterized that very eloquently. When you look at our experience, take BULLRUN as an example, there was no question that the blockchain that we would start with our tokenization on would be Ethereum, right?
So just in case you didn't hear it, let me rephrase it. This is an individual, like we said, from BlackRock. So he was talking about BULLRUN. BULLRUN is the stablecoin issued in partnership between Securitize and BlackRock. It's called BULLRUN. This is the token he's talking about. It's a stablecoin. And he said that there was no question, no debate. It was clear as the daylight where they were going to launch their BULLRUN token. They were going to launch it on Ethereum. This is not me saying it. This is not Ethereum saying it. This is now the individuals who deployed an entire infrastructure, an entire stablecoin, which is the largest stablecoin, as we are about to see. And I should rather rephrase it and say it's the largest tokenized treasury stablecoin in the entire industry. And BlackRock, for those who still don't know, is the largest asset manager in the world. They have the largest ETFs in the world, including Bitcoin and Ethereum. So, and here is a representative saying that they had no doubt, no question in their mind. They knew it was obvious that they had to pick Ethereum to launch their, where they wanted to launch their BULLRUN token. Let me just briefly go back so you can listen to it all through.
An example, there was no question lately is very overdone. There's a lot to be optimistic about. Joe's obviously characterized that very eloquently. When you look at our experience, take BULLRUN as an example, there was no question that the blockchain that we would start with our tokenization on would be Ethereum, right? And that's not just a BlackRock thing. That's really anybody who would enter this space. That's the natural default answer, right? That's really important. And you see even today, you know, we're excited about having this be a multi-chain product now. We're seeing assets across all of them, but Ethereum has, you know, a significant majority of the assets still. And so clients clearly are making a choice that they do value the decentralization, they do value the credibility and the security. And that's a great advantage that Ethereum continues to have.
Here you have it. You had it from BlackRock itself. So this is not me saying it. This is not Ethereum saying it. This is the largest asset manager in the world that deployed the, let me not just talk about it. Let's go there. Let's go there. I always like to verify what we're saying. So this is BULLRUN token. This is what he was talking about, right? He made a reference and said there was no question about it. It was obvious for them, to them, where they were going to deploy the BULLRUN. BULLRUN is a tokenized treasury. And let me share this with you first, this screen. BULLRUN, like we said, is US Treasury, right? You see here on the far right, it's a US tokenized treasury bills. Treasury bills are bonds. Bonds are US debt. So they tokenized it and called it BULLRUN. And the largest one, that is BULLRUN, the number one is BULLRUN, and it's on Ethereum. Now that we saw that, let's see where it is. So you see here, it has 1.2, almost 1.3 billion in assets, right? And if we look at this chart, this is the market cap, market share. In blue is Ethereum. So out of the 1.2 billion, 1.1 billion is on Ethereum alone. So they literally have over 98%, almost 99% is, yes, 99% of all tokenized assets, like all these tokenized treasury bills, are on Ethereum. This is not speculation. This is not hype. This is not wishful thinking. This is the truth. These are facts. And this is what's happening right now on Ethereum. And we just had the individual say it was no question where they were going to launch this, because they believe in security and stability. And the only blockchain right now, and it's not just a BlackRock thing, he said. This is standard, like this is common, this common knowledge. This is everybody knows this, at least within the traditional financial space. Like Visa knows that, MasterCard knows that, JP Morgan knows that, right? So he was literally giving us a heads up or telling us that, hey, while you are flipping meme coins, we know that Ethereum is where we want to launch our products. And not just we as BlackRock, but everybody knows that. That's what he said, right? And if you didn't hear it, here you can hear it again, because this is very important.
So, the choice of the element, but Ethereum has important, and that's the would start. There was no question that about Joe's obviously characterized that very eloquently. When you look at our experience, take BULLRUN as an example, there was no question that the blockchain that we would start with our tokenization on would be Ethereum, right? And that's not just a BlackRock thing. That's really anybody who would enter this space. That's the natural default answer, right?
It's not just a BlackRock thing. It's the natural standard of things. It's natural. It's like logic. It's common sense. Like this is common knowledge. Basically, saying Ethereum is the place, is the way to go. Not just for BlackRock, but for everybody else.
That's really important. And you see, even today, we're excited about having this be a multi-chain product now. We're seeing assets across all of them, but Ethereum has, a significant majority of the assets still. And so clients clearly are making a choice that they do value the decentralization, they do value the credibility and the security. And that's a great advantage that Ethereum continues to have.
Security and credibility. That's an advantage that Ethereum has. We need to understand that, right? Again, let's not take his word for it. Let's verify, right? Here's another article talking about the resilience, right? So Circle plans to become a full reserve national digital bank, digital currency bank, right? And this is something that we've been talking about for a very long time. Why do they want to become specifically a full reserve national digital currency bank? Because they are already fully reserve digital currency, right? Now, all they have to do is acquire a bank or get the licenses to be a bank. But that's not a big deal, because one of the largest banks in the world, Goldman Sachs, has backed them. They are backed by Goldman Sachs. They are backed by BlackRock. They are backed by JP Morgan. So they have the backing of the largest banks in the world. So they wanting to be the first full reserve digital bank is not a big deal, because they already are extremely liquid. They're already backed by treasuries and liquid and cash. So this is not a big deal. All they need to do is get the proper licensing and or acquire a bank, and boom, they are a full reserve national digital currency bank, right? And this is what they aim to do. This is what they aim to be. They're already backed by well-established banks, as we see, and the plan is to become a full reserve national digital currency bank within the US. They have the backing and blessings of Larry Fink, of Goldman Sachs, of JP Morgan, and so on and so forth, right? So this is what I want us to understand here. We believe that full reserve banking, where is it? What is it built on? It's built on digital currency technology. There's nothing about digital assets here. It's about the technology. You can't build the only way to build your full reserve banking, you have to build it on the technology. Remember, technology is the infrastructure that you deploy it, and the choice was clear, right? They chose Ethereum to do that. So why are we highlighting this? Why are we saying this? Is because stablecoins already are full reserve right now. They have the full reserve. You can withdraw 10 billion at this right now, and you'll get your 10 billion right now. But you can't do that with Bitcoin, like we just saw. You can't do that even with Ethereum, right? So, and this is why very early on, from the very start, we started accumulating liquidity from the very start. And the more trades are happening, the more liquidity you accumulate, so that eventually in the mid to long term, we'll be able to have 100% liquidity to market cap ratio. That's the whole idea, but we'll get to that. So now that we understood that, and now that we see the reason, we understand why Circle wants to become a full reserve bank. They already are a full reserve stablecoin. To be a bank, they have the backing and everything. They can achieve that. That's not a big deal. So now let's move forward to something else. BlackRock, we understand that Larry Fink is heavily into tokenization, right, of assets. We saw that he already tokenized the largest treasury bill, right? We saw that treasury bond. And right here, like we saw, let me show you, right? BULLRUN, this is the largest digital liquidity fund that they have. And this is to provide liquidity for all tokenized assets that are about to be deployed on chain. And keep in mind, last time we checked, all global assets are roughly 500 trillion, give or take, depending on which data you pick this from, which source you get the data from. 500 trillion is the number that is thrown around. Those are the global assets. And we had the representative of BlackRock saying that they didn't even waste a minute to think about where they were going to deploy. It's common practice. He used the word natural even. So it's a natural space, right? They have a proven track record. They are solid, and they're secure, right? So let's go back and understand this. So this is why BlackRock is believing heavily on tokenization, and he picked Ethereum to do all of that. Why is this so important? Why are we highlighting this so much? It's because we need to understand that here, when it comes to tokenization, and asset management industry, what they rely on the underlying technology in digital assets, right? The operational potential of the underlying technology in digital assets. This is important to understand. They don't depend on assets. Nobody cares much about that unless you care about the underlying technology of it. Tokenization is about technology. You can't tokenize things without the technology. And this is why technology plays such a major role, and they picked their winning horse, right? Ethereum. Now, community. Now it gets interesting. Remember how we looked at this tab and asked ourselves, why did the Swiss central bank reject Bitcoin? Why did they reject Bitcoin? And we identified that one of the reasons was its volatility, but its even more obvious reason, like we did the math, was because its lack of liquidity, right? And we identified also, and this is very, very important. Let's go back here, that the US, this is the US, the largest economy in the world, right? They've established Bitcoin, right? To be a strategic reserve. This is the US, the largest economy in the world. And the Swiss, they just did, and this is an executive order, which can be reversed. The next president, because this is the second term for Trump, he can't run again. So that means that the next president has the potentially, and authority, right? Like it says here, by the authority vested in the president and by the Constitution, they can remove this law, right? In 2028, they can remove this law. Not a big deal. It's just an executive order. And this is important for us to understand. So they established a Bitcoin reserve, right? Let's go to the Swiss. Now, this is very interesting, community, because the Swiss authority, this is FINMA. FINMA is the like we said, let's look at here. FINMA is the authorized. FINMA is the authority. It's like the US SEC equivalent of the US. We need to understand that. And this is what they say, community. You see that they believe in digital ledger technology, right? They believe in the digital ledger technology. And like we discussed, everybody talked about the digital ledger technology at the summit today. And I want us to understand that they believe in digital ledger technology. This is the monetary authority of Switzerland. Now let's look at something interesting here. This is the law, okay? This is the law. The law here says that digital applied to FINMA for the operation of a small, BX is in Stuttgart, is in Germany. And they, by the authority of the Swiss monetary authority, were enabled to operate a digital ledger technology trading facility. They were given the authority to do that, right? They were given the green light to do that. And if we go back to let's go back here. You see the Swiss allowed, this was the news. This was the news. We see how they refused. They rejected Bitcoin, but they adopted the blockchain technology as a technology. Exactly. Now, this was the news. The news was that the Swiss subsidiary in Stuttgart, the stock exchange BX Digital, received approval, right, from the Swiss Financial Monetary Market Supervisory Authority, the FINMA, to operate blockchain-based trading system, right? And this trading system, this platform enables direct settlement and transfer of assets. What are they using? Ethereum-based technology, right? Blockchain technology, Ethereum. So we had BlackRock saying Ethereum is the way to go, and it's no question. And this is natural standard. Everybody is using Ethereum. That's how it's supposed to be. If it comes to smart contract, it's the obvious choice, no questions. Now here we come in and talk about the Swiss National Bank. They approved their subsidiary in Stuttgart, Germany, to use the blockchain-based trading system, but it's supposed to be Ethereum. So it's on Ethereum. The asset is not sustainable and efficient. However, the technology of Ethereum, it's about the blockchain technology. That's what they want, right? Let's understand this. So they reject Bitcoin to be in the reserve. However, they give green light for their subsidiary in Germany to go ahead right here and use Ethereum use the Ethereum technology. This is an article. Like we said, let's not take the word for it. So this is why we came here directly to FINMA, right? FINMA, this is them. And we see the article right in front of us. FINMA has licensed the first ever digital ledger technology trading facility to date. There is no other licensed digital ledger technology blockchain that was able to do that. So the digital ledger technology trading facility operated by BX. Now we went straight to their website. This is FINMA's direct website. There is no news outlet. So we came right here and we can verify. We always like to verify. So it's true. This article is true. Now, if we scroll further down, something very interesting is here. This is what we want to hear. So BX Digital's digital ledger technology trading facility uses a public blockchain. And then in brackets, they put it here, specifically Ethereum. Specifically. So they want to be specific because people like to confuse blockchains with Bitcoin and cryptocurrency. So they had to specify it and say, hey, don't make no mistake. It is Ethereum. That's the only digital ledger technology to date that is being used. And what makes this so interesting is this, community. This is the most interesting part about this, is that this is not an executive order. Innovation on a solid legal basis. Remember, the US put Bitcoin as a strategic reserve, and it's an executive order that can be replaced and removed and erased because it's an executive order. But development of distributed technology ledger created a financial market infrastructure. This is law. The Digital Ledger Technology Act entered into force in Switzerland back on August 1st, the Independence Day. August 1st in Switzerland is their independence. It's like the 4th of July in the US. So on Independence Day, the Swiss, back in 4 years ago, like 3.5 years ago, on Independence Day, they put this in force. This is a law. So the Federal Act on the adaptation of the federal law on Article 73, blah, blah, blah. This is into law. This is not an executive order that they should be using the distributed ledger technology. And then they specify what it is. What is this digital ledger technology that you're talking about? It is specifically Ethereum, nothing else. So the Swiss have put it in law for the last 3.5 years. They call it the innovation on solid legal basis. This is legal. Nobody can change it. It's in the law for the last 3.5 years. And in Switzerland, governments, institutions are enabled, allowed to use the digital ledger technology, but specifically Ethereum, period. This is why you can see BlackRock saying, of course we're using Ethereum. I mean, the Swiss are using it. The Swiss National Bank is using it. Visa, MasterCard are using it. JP Morgan is using it. Of course we're using it. That's the standard. It's natural, right? And this is something we need to embrace, community. We need to understand. This is not a hype. This is not wishful thinking. This is direct from FINMA. This is the Swiss Monetary Authority, the financial hub of the world, the Swiss National Bank, and the Swiss Financial Authority has placed it into law since 3.5 years ago. This is law. They even give you the article. You can Google it. Let's just do an example, right? Let's do this. Federal law. We can copy this. Let's do this. Let's do this and see what Google is going to say. If you Google this, you see it right here. Financial Market Infrastructure Act. This act governs the organization and operation of financial market infrastructures and the financial market participants in securities, all this stuff. So we can read on and on. I don't want to bore you, but this is law, community. this is put into law. It's not an executive order. That in Switzerland, they're using specifically Ethereum as the blockchain of choice. No wonder we see the same agenda of all these other ones. So now that we read that, let's not take the Swiss word for them. Let's not believe them. Let's not believe BlackRock either. Let's listen to somebody else. Let's listen to somebody else. So this lady is about to discuss the importance of real-world assets and how that is paired to stablecoins, right? So let's just briefly tune in and listen to what she's saying.
Right. And you mentioned tokenization. We've heard a lot of talk at this conference about tokenized real world assets, stable coins. So we'd just love to hear, blockchain adoption is going to come down to utility. And, we've seen some gaining steam, these tokenized money market funds. There's one available on Algorand.
Aberdeen money market fund.
Yes, yeah. BlackRock and Franklin Templeton have their versions of it as well. Yeah. So just curious of your thoughts on the utility of those, how you expect those to be used going forward, and kind of how they might interact with stable coins in the future.
Yeah, I will say, and you wrote a very nice article about this just the other day, but I will say that tokenization cannot exist without stablecoins. Like, they are one and the same thing. Because if you have tokenized the asset side, but you haven't tokenized the money side, it just doesn't work. You're not going to, the whole thing that Web3 gets you, what we did with Aberdeen is it gets you an atomic swap. So what we did with Aberdeen is we tokenized a money market fund, and then a company named Quantos, who's a MiCA compliant, regulated by the Dutch central bank, programmable euro. It's actually not a stable coin, it's a programmable euro, digital euro. What is interesting about this is the fact that you can trade instantly, where clearing is settlement. You can trade instantly a tiny sliver of that Aberdeen money market fund for a digital euro, and you're done. And so if one leg of that trade is missing, you don't have anything, right?
So we heard what the lady said, and this is what we've been talking about in our community for the longest, right? And the most important part, because she said quite a bit, and I don't want us to be distracted. The point I want us to take away is this right here. Let's tune in again and just listen to this part.
The other day, but I will say that tokenization cannot exist without stablecoins. Like,
tokenization cannot exist without stablecoins, period. We can look back for the last 2 years. We've been talking about this for the longest. We've been talking about how Ethereum, this is why Ethereum is the solution, or will be the solution, and stablecoins are the solutions for the debt crisis in the US, right? We've been talking about all of this for the longest. And why is this so important? This is not news. This is just a confirmation, because we always want to verify things, right? We saw in the executive order, again, remember how we saw in the executive order back in January, the whole idea was to promote and protect the sovereignty of the US dollar, right? And this was to develop and grow the lawful and legitimate dollar-backed stablecoins, right? So with real-world assets coming into place, and we've listened to this multiple times, I'm not going to play it again, but we get the idea. Like, this individual said that, first of all, the lady just said that without stablecoins, there is no real-world asset, there is no tokenization. And we see that the largest asset manager in the space, they just said, well, we do tokenizations and that's our specialty, and we chose Ethereum to do the tokenization. So what are we saying with this? Without stablecoins, there are no real-world assets. And now that means we need to, if that's the case, let's first of all identify where are all the real-world assets in the first place. And real-world assets, like we just saw, are on Ethereum, with the largest one being BULLRUN. It's on Ethereum. ZK Sync is on Ethereum. So if you add these up, what the math geniuses already did, you come to 75% 75%, over 75%, almost 76% of all real world assets are on Ethereum. And this is an even better graph. If it comes specifically to Treasury, because these are the largest tokenized assets, are treasuries, right? Digital treasuries. It's even more impressive. Let me share the screen here. It's even more impressive. You see, BULLRUN is a tokenized treasury, and blue, this is Ethereum, right? It represents Ethereum. And you see here 99% of real world assets, tokenized treasuries, BULLRUN is on Ethereum. So we just got another confirmation that real world assets go hand in hand with stablecoin. And the largest real world asset, BULLRUN, is paired with USDC, which happens to be the stablecoin that we are paired with. And also, if you stake BRL, you receive USDC. It just happens to be so. So that means that with Black BULLRUN providing liquidity for all real world assets, or digital, they want to tokenize the world, and the financial markets, the global asset value sits at $500 trillion. So if that happens, of course, not going to happen over the weekend, but over the next 5 years to a decade, once they start piling up and tokenizing all these assets, it will push Ethereum with it. I mean, it will push USDC with it. And because all of that, 99% of all of these transactions are on Ethereum, it's going to push Ethereum with it as well. This is no hype. This is no wishful thinking. This is not just speculation. These are facts. This is the truth. And this is happening, and we can verify it, right? So the more that is going to be built on Ethereum, the more liquid Ethereum is going to become. The more stable it will become, the more deflationary it will become. So this way, it's going to attract institutions and individuals alike to stake Ethereum. This will secure it even more, making it very stable, very liquid, and even more deflationary. And this will make it the ultimate store of value and ready to support any central bank to strengthen its monetary policy, like we always said, and support with inflation for their fiat. Right now, to be honest, and let me share this screen with you. Ultrasound money right here. I like this website. It's really informational. It gives you an idea of right now. Oh, they just updated. Even though Ethereum is inflationary, and this is what makes Ethereum so special. Right now, Ethereum is not at its best. Ethereum is literally not at its best. But you see Bitcoin is in orange. Even though Ethereum is inflationary right now, it's still less inflationary than Bitcoin. So Bitcoin is still more inflationary than Ethereum is, even though Ethereum is not at its best. It's banning only 27,000 and it's issuing 940,000. But nonetheless, and there's not much activity right now. This is before BlackRock and stablecoins and JP Morgans and MasterCard and Visas are on there. This is before. And still, it's more deflationary than Bitcoin is. And people always say how Bitcoin is scarce and all that stuff. And it's having trading volumes of amazing trading volumes and so on and so forth. But at its Ethereum is at its weakest point. It hasn't even hit its all-time high, last cycle's all-time high. It's at its weakest point. There's literally no activity whatsoever on the chain yet, but it's still more deflationary than Bitcoin is, as you can see on this chart. This is not hype. This is not wishful thinking. This is a fact. So the asset that is placed as a reserve currency at its best is not deflationary enough to beat Ethereum at its worst. Let that sink in. And this is why you see that adults in Switzerland and in Singapore rejecting Bitcoin and saying we need something that even at its worst, it's still beating Bitcoin. So imagine once BULLRUN is deployed fully and it's in full action. Imagine once Visa, MasterCard start onboarding the 25,000 other banks and institutions. Imagine once the collateralization of the tokenized assets by JP Morgan starts taking place. And right now, they're trading $10 trillion a day. Imagine this number is going to extremely go down, and it will make Ethereum extremely deflationary and more attractive. So what we're saying is not wishful thinking, community. And this will make institutions want to stake Ethereum, and this will secure it even more, and it will make it very stable and liquid. And then if we go back to Switzerland, it will fit. They'll be able to say, okay, now it's fit enough. Now we can use it. Because as of now, they were saying that due to its volatility, high volatility and instability, right? That's a concern for Bitcoin and other digital currencies. And it also says that they can't use, Swiss National Bank can't use reserves. It can't support, it's not meant to support the monetary system. Why? Because it's not liquid, and it's also not giving them a yield. It's not giving them interest. Like if they purchase US Treasury bills, they're getting 5% or 4.75 right now. And the same thing, but money, dollar is inflationary, right? But now with all of these happening, it will make Ethereum deflationary. And now it will be attractive, and it will be able to support the Swiss national monetary policy, and it will meet the Swiss requirement to be used as a national reserve. This is basically what they're saying. They're already using Ethereum as the technology. We saw it. It's the only, let's not take my word for it. Let's go back there again. They're already placed in law. Remember, let me remind you, it's already in law, right? Adopted by the federal law of Switzerland on August 1st, 2021, that they're going to use DLT trading facility uses a public blockchain, specifically Ethereum. It's put in the law that the Swiss are using Ethereum as their digital ledger technology. No one else, only Ethereum. So they're already using the technology. Now they just want Ethereum to be at its full potential, not inflationary, and to be adopted. So once the regulations are clear and MasterCard, Visa, JP Morgan, and BlackRock, which they already said it was no question. That's the natural standard. Financial institutions are jumping on Ethereum. Ethereum is going to turn deflationary, and this is going to be the qualifier for the Swiss to adopt Ethereum to their reserves, because it will now meet the requirement. It will be extremely liquid, not as volatile. They can stake Ethereum and earn more Ethereum without causing inflation, and then they can use Ethereum to support their monetary policy without having to print or issue even more. This is not wishful thinking. This is not something I am making up. This is something that is in the law of Switzerland, that it's open. This is open information. This is their website. You can do your own research. Go verify what we're just looking at. This is not an executive order. This is enforced into, this has been in law. It's nothing new. It's a 3.5-year-old law that the Swiss are using the distributed ledger technology. Remember, the topic is, what's the difference of the digital asset and the digital technology? The blockchain asset and the blockchain technology. The technology of choice is Ethereum, and you're building assets on it. So first of all, you need to choose the technology that you deploying your smart contracts on, you deploying your ecosystems on wisely. And that's Ethereum. It's good enough for JP Morgan, it's good enough for BlackRock, and it's good enough for Visa, MasterCard, and their 25,000 global banks and other financial institutional partners. So that's the message. That's the difference of blockchain asset and the blockchain technology. Blockchain assets, if they are still not sustainable and efficient, they're not fit enough. They're not fit enough, and they get rejected. They get rejected unless they meet the minimum requirements. They need to support the monetary policy of the central bank. That's the whole idea. How do you meet? How do you meet that? How do you do that? It's simple. Be liquid, like stablecoins are. Be extremely liquid. And what else? Be a medium of exchange or a store of value. In order to be either of these, you have to be extremely liquid. And you have to also be in a situation where when times are tough, people rush to you, right? When times are tough, investors rush to you, just like we saw here, right? This is why people are rushing to gold and not Bitcoin, because they know that the Bitcoin is not liquid. We just verified it, right? Remember this article. We just saw the 6 billionaires. We saw, right? We saw the 6 billionaires. They can't cash out. I feel sorry for them, you know? They can't cash out. And then we saw the 40,000 millionaires. They can't cash out either, because they would need over $40 billion to cash out. And then these individuals with 100 million, there's 78 of them. They would need 7.8 billion to cash out, right? However, you do the math. There's only 1.8 right now. There's only 1.8. Let me refresh. There's only 1.8 in the liquidity, right? This is liquidity. There is 1.8 billion. So let's round it up, 2 billion. So there is not much. This is why the Monetary Authority of Singapore said that cryptocurrencies failed the test of digital money. So whenever you hear us as a community talking about liquidity and stressing on the importance of liquidity, you understand why now. You'll be able to understand the reason why. Because in the mid to long term, and why you should use your volume efficiently. Remember why we always talk about the 4 challenges in the industry. You need to master these 4 challenges in order to be qualified to be considered as a reserve currency for central banks, at least for legitimate central banks like Singapore and the Swiss National Bank, right? So you need to address 4 challenges. Lack of liquidity, like we just saw. You need to retain liquidity. You need to. It's a must. If not, it's not fit enough for central banks to be adopting it in their reserves. So liquidity plays a major role. And you also have to be at least deflationary, right? And like we saw here, I know this surprised a lot of people, especially Bitcoin maxis, that at Ethereum's worst, they're still more deflationary than Bitcoin. Ethereum is literally at its worst, and Bitcoin is still surpassed last year's all-time high, It's the most successful ETF in the world. It's just placed as a US reserve currency asset, and it's still inflationary, more inflationary than Ethereum at its worst. So this is going to change community, and Ethereum is going to be extremely deflationary. And the more trades it's receiving, the more deflationary it gets, and the more staking rewards it's going to give for the stakers. One final thing I want us to understand: why are individuals focusing so much on data and data on validating? If you want to validate, and we'll get into more details, I don't want to go overboard. It's too much information. So let's look forward to Saturday. On Saturday, we'll continue and build on top of this topic and understand why data centers are being built, so many. It's because of the validation, to validate proof of stake. These centers are prepared to be able to accommodate. These servers will be used to conduct staking. And these large data centers led by Amazon, they already secured AmazonEthereum.org. There's a reason why. They have the largest data centers and the largest computing capacity. They already secured the domain name AmazonEthereum.org. So they are going to be staking Ethereum and receiving staked Ethereum, and they'll be paid for doing that. So if you already have a large data center, you're the largest leader in cloud computing, you already have capacity to stake Ethereum, and then you're being paid to do so also. And then because you already are trusted and you're the market leader, we are using their services. Our BULLRUN staking platform is using cloud computing services. We subscribe to it every month, right? We have a subscription. And if we can have our own platform using them as their servers, what makes you think they can't stake also themselves? Why don't they stake themselves? So this is what's going to happen with Amazon, and then Google, and then Microsoft. They dominate 98% of cloud computing. These data centers are going to be used to validate Ethereum. Why? Because the clients are going to be Visa, MasterCard, and 25,000 other institutions, BlackRock, and all these tokenized assets. They need security. And how do you secure Ethereum? Staking. But we'll get into more of this on Saturday. So let's not go overboard for today. There's enough information for today, community. All I wanted us to understand and close out with is this. Let's focus on the 4 challenges in the industry. Let's understand the difference between blockchain asset and blockchain technology. The technology is the key. It's important. And once you should use this technology to develop a platform that is addressing lack of liquidity, inflation, inefficient staking distributions, and lack of inefficient use of volume. What do we mean in simple terms? Establish mechanisms that assists you to accumulate liquidity. We saw that the largest cryptocurrency in the entire industry is completely illiquid. We just did some math on it. So this shows you learn from others. This is why we're retaining liquidity. Now, whenever we talk about liquidity, understand why. And it's not just through trading. We already have 10% put aside to stake and buy back, and stake and buy back. You get the idea. And then we went a step further and are issuing staking boosters. Then we're using these boosters will unlock 100% of a USDC distributions, and you need to purchase and stake 5 of them. And we use the revenue from these NFTs to build we use the revenue, right, to feed into the liquidity pool, right, so that we can build a sustained and healthy liquidity, right? Our aim is to have 100% backing in the liquidity pool based on its market cap. So whenever individuals want to cash out, they can, right? That's the whole purpose. That's the whole idea of this. And then the community, us individually and as a collective, we can do the same thing like this right here. We can use our staking distributions, USDC, and compound and keep a restake if we so wish. And this will even cause even more stability to this to our ecosystem. Now, these are things that are not hype. These are facts. First of all, we talked about scarcity, at least deflationary. We started with a max supply of 1 million. Now we are down to 963. And with every day, with every trade, this supply keeps shrinking. Why is this important? Because we have a staking platform. And right now we have a percentage of 68%, over 68% of all the supply, circulating supply, is staked. So there's not much remaining. Meanwhile, the supply keeps shrinking as well. So once you have this done rightly, you create an amazing effect. And before I leave here, let me show you the smart contract. If you come here, the number one wallet, the largest, is the staking platform. And you see how it's a contract. You see here, it's a smart contract. And you can see how it's diligently accumulating USDC. So each time there are trades, buys and sell, this contract, staking contract, accumulates USDC for those who are staking their tokens, and it will pay out from here. So the more this platform is adopted, the more this platform is liquid, the more it's traded, the more USDC it accumulates, right? And this is how it's accumulating USDC naturally and sustainably. The more it's adopted, the more it's used, the more liquid it gets, the more trades it gets, the more it will accumulate the USDC. And to close this out and to bring this home, let's just briefly look at what we've been talking about. We talk about volume, efficient use of volume, right? So as you see here, Bitcoin and Ethereum, they have 31 billion in volume, 13 billion in volume. This is a lot, but how are they using this volume? We saw that Ethereum's volume they have a lot of volume, but how is it? It's still inflationary. We just saw how Ethereum is still inflationary, even though they have 13 billion in volume. So just to make a point, let's not take 13 billion. Let's just take 1, for example. And this is how we're closing this session. Let's close out this session like this. Let's go to our tokenomics and let's look at how we will look like if we had a 1 billion in volume. 1 billion in volume. And 1% of 1 billion is 10 million, right? So why are we choosing 10 million? 1% of 1 billion is 10 million. Let's keep this in mind, 10 million in one day. So let's come here. 1% of 1 billion is 10 million. So burning rate is 1%. So this means that if we had 1 billion in volume today, $10 million worth of BULLRUN would be removed from the total supply. So if we go here to Etherscan, we'll see that right now our current supply is 963. It keeps shrinking. So 10 million worth of the supply that is still remaining here is going to be removed from the total supply permanently. This is within 24 hours, right? So let's go further. Same 1%. This means that 10 million, you see USDC distributions, is based on volume. So this means that instead of, let's go back here. Instead of just the 6,000 that is in this contract right now in USDC, this means that 10 million USD dollars worth of USDC will be accumulated within 24 hours. Do you get this? Instead of 6,000, it will be 10 million USDC within 24 hours. And this will go to those who are staking. Right? Let's go back here. This goes to this right here. This is the smart contract. So 68% of the community members are staking. So amongst yourselves, you will be sharing 10 million within 24 hours. That's with 1 billion volume, right? That's what it means. And now if we go to the most important, in my eyes, is this. Liquidity. Now, this is not 1%. Liquidity is 3%, right? If we come here to liquidity, we see we saw that burning is 1%, USDC is 1%. Now liquidity is 3. So for the math geniuses, that means we have to multiply this by 3. So that means 30 million. So 30 million worth of liquidity within 24 hours would have been added to our liquidity pool. What does this mean? It means that if we come here, our liquidity is going to increase by 30 million. So instead of the 365,000 right now, it will go straight to 30 million just within 24 hours based on a 1 billion volume. But now let's make this interesting. Let's calculate if this happens in 1 day, how will it be in 1 month? So let's do times 30 just for the sake of math. So now this is within 1 month. 1 month worth of 1 billion in volume, it puts us at 900 million, right? This is liquidity. This is 1 month. Now let's go further and do for the rest of the year. So times 12. So we have the year. So this is 10 billion, 10.8 billion, right? So within 1 year of just 1 billion in volume would have accumulated a liquidity of almost 11 billion. Now keep in mind, as we are accumulating liquidity, what is happening? USDC distributions are also being accumulated and the supply keeps shrinking as well. Let's keep this in mind. And then to make it even more interesting, we say that within a year, we would be sitting on almost 11 billion in liquidity. Now, let's go back to the largest cryptocurrency in the space right now. It is Bitcoin. Bitcoin is 16 years right now, right? Since 2009, so 16 years. Actually, October 2008, but let's just for the sake of math, say 16. So after 16 years, Bitcoin accumulated, let's round it up to 2 billion. 2 billion in 16 years. With a volume of, right now it's a low one, 30 billion in volume. 30 billion. So 30 times more than what we calculated with. We calculated with 1. And it took us 1 year to have almost, what was the math? Let's go back. 11 billion. In liquidity, right? This is almost 11 billion. So within a year, we would have 10 times more liquidity. Let's do the math right. Over 6 times more liquidity than what Bitcoin has right now after 16 years and after being the largest market, the #1 cryptocurrency with the largest ETF in the world. So this is something that we need to understand, and this is the difference between a liquidity-driven monetary system or ecosystem, I should say, with fundamentals, and one that just has a high volume but is literally not doing anything with it, right? And if we look at Ethereum, we identify that we saw that Ethereum is actually burning the supply, right? The more volume they have, the more bonds they get. But even though they're high volume, they're still inflationary right now as well. So this is it on our side, community. This is it on our side. This is all that I wanted us to share together today to have an understanding. There was a lot to cover today, and I hope that we were able to take away something from today's session. Community, with this said, I'd like to come back to you and check with you whether there's anything that you want us to answer, and some comments. Let's go through your comments really briefly without extending this for too long. So we see Queen Mel says, another day of education. We're always pleased to have you with us, Queen Mel. Thank you for taking your time and being part of this session today. Success and education goes hand in hand. Thank you. Thank you for this opportunity of this informative and educational journey of success to our developers. Thank you as well for always being diligent, consistent, and participating in these events. You're very, very much appreciated. Queen Maria says, greetings, our mentor, King Steve. Greetings, Mom and the team. Happy and looking forward to motivation and knowledge. May God bless you, sir. Thank you so much, Queen Maria. I hope you are able to take away something from today's session. We always encourage the community to be critical. Ask the question why. Let's be inquisitive, right? Let's have a child's mind that wants to know, wants to understand, wants to inquire, you know. Let's go back to that mentality where we want to understand something, because it's in human nature. If you don't understand something, you'll be fearful of it, regardless of whether it's something that will be actually beneficial to you. But simply because you don't understand it, you'll fear it and run away, right? So this is why we have these community events, to ensure and facilitate us as a community to be informed and educated. And like we discussed earlier at the beginning, let's not believe articles, tweets, or whatever happens and take their value for it. We have to verify, triple check and quadruple check, like we did throughout this session today, right? Watch your sources. So I hope that you're able to take away something from today, Queen Maria. My great brother Theo says, greetings, happy Thursday and happy spring. My great brother Steve, dearest great Queen Mama Wino, and my epic BRL family. This will surely be yet another fire session indeed. Thanks as always, great one. Thank you so much, my great brother Theo. It's always a pleasure to see you within the community. We appreciate you very, very much. Glad to see you within the community once more. Queen Resego says, greetings, family. Happy to be here today. Looking forward to learn from our best developer, King Steve. Thank you to our Queen Mom and our brother for having us in mind always. God bless. We appreciate you very much, Queen Resego, and may you also be blessed. We appreciate your consistency, your efforts. You're very much appreciated. Then we have Queen Cynthia, says, greetings, community. I'm here to educate and I'm here to be educated and inspired as always. Thanks, Mr. Steve, for the consistency. Thank you very much, Queen Cynthia. You're very, very much appreciated. It's always a pleasure to see you in the community as well. Queen Lati says, greetings, BULLRUN family. It's another great day to sit and listen to our crypto tutor as he unpacks the difference between blockchain assets and technology. Let's dive into their different roles in crypto. Thank you so much, Queen Lati. You're very much appreciated. Really hope that you're able to take away something from today's session and that it was of use to you. And like we always say, always verify your sources, be critical, question things. And this is how we encourage the community to be, right? This is how we can grow individually and collectively as well. Queen Kinole says, good evening, BULLRUN family and our developer, Mr. Steve. Looking forward to today's session to enhance my knowledge. Queen Kinole, I hope you were able to take away something from today's session. I hope that we appreciate you for participating, being part of this. Thank you so much. Then we have Queen Debbie saying, interesting topic. Thank you so much, my brother. for always informing us and your consistency. Greetings to you, my beautiful Queen, Queen Madawino, and the BULLRUN community. God bless you, brother. Thank you so much, Queen Debbie. You are very, very much appreciated for all your efforts, your commitment, your consistency as well. You are very, very much appreciated by us all as well. And I hope that you're able to take away something from today's session. We have Queen Val saying, hello, Bull Runners. Happy Thursday to us all. Ready to hear from our teacher, Mr. Steve. Thank you for the consistency and the hard work you put in. Thank you, Queen Mother, for what you do with the women. Thank you so much for encouragement, your kind words, Queen Val. I can only give it back to you as well. We appreciate you very much for your consistency, your efforts you're putting in. You're adding so much value to the community and everybody else around you. The daily tweets that you support Queen Mother with, and you in cooperation with how you put together the Zoom sessions on a daily basis that you host, very much appreciated as well. And here are the links to our Telegram groups community. Those who have not yet participated or are not part of the community yet, feel free to join and be part of it, even just to be informed and educated and be on top of the current events and what's happening. We have Queen Gloria saying, hello, BRL community. More than ready. Bring it on, Brother Steve. May God bless you. Thank you so much, Queen Gloria. I hope that you were able to take away something from today's session. We appreciate you very, very much for being consistent and always participating and being consistent. We have Queen Rosemary saying, set ready for the session to be more equipped with knowledge. Thank you very much for the feedback. I really hope that you were able to take away something from today's session, Queen Rosemary. You're very, very much appreciated. Then we have Queen Grace. Queen Grace says, it's another beautiful day to again listen to our tutor, Mr. Steve, as he unfolds to us the difference between assets and technology. Thank you, Steve, for always being there for us. We thank you, Queen Grace, for always being there for us as a community as well. We appreciate you very much for your consistency, all the efforts that you put in. It doesn't go unnoticed, and we appreciate you very much. You are a very strong and solid pillar for us all, and you lead by example as well. So thank you very, very much as well. We have Queen Emily says, hello, Brother Steve, Queen Mom, and my community family. Blessed to be part and waiting. Thank you so much, Queen Emily, for always being consistently participating in these community events. We appreciate your feedback, your involvement, your engagement, your consistency very, very much. Glad to see you once more in the community. Queen Aloshi says, greetings, BULLRUN family. I'm very proud to be a member of this ecosystem. I really thank God for the information and education Dev Steve passes on to us to silence the noise about crypto in the media. This is so beautifully said. This is very beautifully said, because Queen Aloshi, you're absolutely right. There's so much noise in this space from all sorts of places. And if we're not informed and educated, this can trigger emotions, irrational emotions out of us, right? And it can cause us to make irrational decisions because we're not at peace, because we don't have the understanding and we're not knowledgeable enough to be able to shift, and to cancel and to lock out and tune out from all this noise. So there's nothing more to add here, community. Queen Aloshi said it already. Queen Tomiletso says, good evening, our developer, Brother Steve, Mama Wino, and the entire BULLRUN family. Greetings right back to you too, Queen Tomiletso. It's a pleasure to see you and have you here with us today. We appreciate your consistency, your leadership as well. We have Queen Kube says, greetings, family, eagerly waiting to hear the difference between blockchain assets and blockchain technology. And I hope that you're able to take away something from today's session, Queen Kube. It's a pleasure having you here with us. Queen Linda says, hello, everyone. Hello right back to you too, Queen Linda. It's a pleasure having you here today. We appreciate your consistency as well. Then we have our brother Ernest. Greetings, my esteemed BULLRUN community. Greetings right back to you too. And I hope that you and yours are doing great. We are pleased and happy to have you here with us today. Then none other than the Queen Mother Awino herself says, greetings to our awesome BULLRUN queens and kings. Real success is to build a community that is educated, informed, and empowered. So strong you won't know the leader. I mean, we could end the session right here, because this is it. This is exactly the point. There is no leader, right? We are a community here. We all learn from each other. We're all chipping in, adding value. We're all doing everything we can to our best ability. This is what communities is all about, right? We are part of such a movement that we can be proud of, something we look forward to participate in, and using this blockchain technology, especially seeing things for what they are and tuning out from all this noise that are pointing to other directions and to destruct us, right? So thank you so much, Queen Mother Awino, for your encouragement, your beautiful words that you shared here with us today. Indeed, success is to build a community that is educated, informed, and empowered. And this is exactly what you're leading by example. You are here on a daily basis. Every single day, you're putting out tweets for the last 2 years. Every single day, not missing a day, leading by example. You're here on multiple events a week, also in addition to the daily Zooms and tweets here for the queens and the community. So it's easy to talk, but it's more beautiful to let your actions speak for yourself. And you're a marvelous example of that, Mom. So thank you so much for your encouragement. No man can become rich without himself enriching others. Beautifully said. Beautifully said. Thanks, Steve, for enlightening and empowering us consistently. This is beautiful. Like we always say, find a way to add value to as many people as possible and do it better than anybody else. That's the true definition of wealth, right? By adding value to others, right? That's the definition of wealth. And thank you so much, Mom, for your wisdom and for your encouragement and your beautiful words. Queen Jane says, hello, community. It's another opportunity to hear from our dev, Mr. Steve. May God give him strength for always being there to educate us more. Greetings to our lovely Mom Awino. God bless you always. Thank you so much, Queen Jane. You're very, very much appreciated. We appreciate your kind and warm well wishes. We wish you the same. May you also always be blessed, you and yours. May all be well with you. May you always be in good health. We appreciate your consistency in the community. Your inputs, your feedbacks are very much welcomed. Queen Kay says, greetings, everyone. Amazing topic. Glad that you were able to benefit or take something from today's session. Greetings to you all. Greetings also back to you too, Queen Kays. We are very pleased to have you here with us today. Queen Anne says, hi, Dev, Steve, Queen Mother, and all BRL community. Thanks, Steve, for all the education and enlightening us every week. Excuse me. We thank God for you. We cannot take it for granted. Thank you so much for your well wishes, warm words, encouragement. We appreciate you just as much, Queen Anne, for your consistency, your commitment, and all that you also contribute for the betterment of us all as a community. The beautiful thing about this technology is that it has this network effect that we shouldn't take lightly, right? It's a win-win for every single participant. That's exactly what it's supposed to be. And if you can address these challenges like we are, you create an environment where the traders, the holders, and the stakers are incentivized to work as a well-oiled system, right? While others are stepping on each other's necks, rugging each other, and being selfish and egoistic, you can build and use this technology in a way that you create a healthy environment of a community where we all are informed and understand how this works for our best interest. We did an example with Bitcoin. We saw how it only takes one or two Bitcoin billionaires, or a handful of Bitcoiners that have 100 million and above, to literally rug pull the whole system. Why? Because it's not liquid. This is why Swiss National Bank, a central bank, and the Singapore Monetary Authority is rejecting and say, like we just discussed in today's session. We're not going to chew it again through, but these are the reasons why. So focus on liquidity, focus on fundamentals, and thank you so much for your input, Queen Anne. Now we have my great friend and Uncle George. The future of finance is cryptocurrency. Indeed, it is. And the digital asset must be built upon cryptos backed by liquidity. Absolutely. And BULLRUN ecosystem tokens are liquidity kings. There's really nothing more to add here. This is one of the comments that we can really just close out the session with, because there is so much information here, right? We all understand, and like we heard the representative from BlackRock saying, he used the word natural. It's natural to embrace Ethereum, right? Because that's the hub of DeFi. That's the future of finance. That's the home of the future economy that is being built on top of, right? And the digital assets, they are going to be built on and backed by liquid assets, right? And not just liquid assets, but by a well-oiled technology, blockchain technology, right? And this is what it is. It is both a technology and an asset. So that makes it very unique. And this is why we focus so much on having systems in place that retains liquidity in 4 different ways, like we discussed earlier. So thank you so much for your feedback, Uncle George. You're very, very much appreciated. Queen Patricia says, good evening, family. Thank you again, Steve, for your commitment. Stay protected and blessed always. Thank you, Queen Patricia, for your commitment, your consistency. We appreciate you very much. May you also remain blessed and protected. We have Queen Luisa says, greetings, BULLRUN family. We are blessed to be here again. Thank you, Brother Steve. Thank you, Queen Mother, for this great opportunity. We also appreciate you, and thank you as well for all your commitment, your consistency, and for being part of this beautiful community. We have Queen Becca says, enjoying this wonderful session. I'm inspired, empowered, and educated. We appreciate your feedback. We are very humbled and pleased to hear that you were able to take away something from today's session. And we appreciate you very much for your consistency as well. Then we have our wonderful and beautiful Queen Mother Caroline. Another great session. Thank you for your dedication, leadership, and your unwavering support. Education is so important. Absolutely. Absolutely. Thank you so much for your enthusiasm. It's contagious. We appreciate you very, very much. We appreciate you taking your time to be so consistent in participating in these events. We are very humbled to have you within our community. Then we have Queen Merenia saying, thank you for a very enlightening and empowering session. Blessings always. Thank you as well, Queen Merenia. You're very, very much appreciated. We have Queen Marilyn says, thank you, Brother Steve. You are the best. We are indeed informed, educated, and empowered. Thank you so much, Queen Marilyn. Very, very much appreciated. Community, this is how we're going to close this session. It's been a very, very long one, very informative. Appreciate you for your for all your participation, for being sticking around and tuning in and listening to this. I hope that you're able to take away something from today's session. Community, you're all very much appreciated. Together, we will succeed and get to where we need to get, and we'll get there step by step, and we'll get there together, right? We appreciate you all for all your efforts you're putting in. We are a community that is fundamental based, not based on hypes, hopeful thinking, or speculations. but we are focusing on facts, on truths, and on fundamentals. And we like to verify and fact check things and articles and tweets that we read, and we like to challenge them, right? If we see that they're not accurate or it doesn't make sense, because these are things, if we don't understand them, they might trigger emotions and we might act irrational and later on regret our emotional reactions. With that said, community, I want to thank you all. Wish you a wonderful, wonderful rest of your week. For the Queens tomorrow, have a wonderful session once more on a beautiful Friday. For the rest of the community, may we latest meet again on Saturday in our next community event on Twitter. With that said, thank you very much, community. Have a wonderful rest of your week. We appreciate you all. Bye-bye, everyone.